Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, and we are live. Today we have with us Lane Kawaoka. Lane is an ex-civil engineer who invests passively in real estate from Honolulu, Hawaii. Lane used to be in a big bad private company as a construction engineer, but after some saving and investing, he found happiness and balance at a lower paying job. Lane journals his experiences in Simple Passive Cash Flow podcast that is on iTunes and Google Play. Lane's parents got screwed out of the 401k and stock market, and it's his mission to get everyone out of the corrupt Wall Street roller coaster and into Main Street investing with safer, higher returns that benefit the middle class of America. Lane, thank you very much for hopping on the show today. How are you?
Hey, thanks for having me, Gabe. Appreciate it.
Absolutely. To get everybody started, why don't you tell us, who you are, what you do, and how you got started in real estate in the first place?
Yeah, so today I own 3,500 units, mostly mobile home parks and apartment buildings in secondary and tertiary markets, mostly in the southeast part of the United States. Nothing in Hawaii, and I spent about 12 years living in Seattle, nothing in those primary markets out there. Mainly a cash flow investor, but yeah, I started this back in 2009 with a few units up in Seattle, Washington, and that was where I got this bug of, buying for cash flow. And then first property I bought was up in Maple Leaf, just south of Northgate there. And
yeah.
$2,200 a month rent, and the mortgage was $1,600. And to a young 20-something-year-old kid, that was a lot of beer money. And that was my ticket out of the rat race. So I was like, just got to keep doing this. And that's where it all began.
I love it. And, you mentioned two things, mobile home parks and multifamily. That's mobile home parks is what me and my partners do now. And so I'm excited to jump into that. But before we do, I want to go a little bit further into your story. So you got your first rental, sounds like, in the Northgate area, which for people who are not familiar with Seattle, it's a decent market. It's very close to Seattle. So it sounds like you probably had some really good cash flow there. And that first, what year did you buy that in?
2009.
So wow,
over 10 years ago. Yeah.
So was it, had the price crashed at that point, or did you get it at the bottom, or was it still kind of on its downward trajectory?
I think I bought it and then went down a little bit, but then around 2012, that's where everything kind of lifted, right? Mm-hmm. So, but yeah, I mean, the first one, everything worked back then, right? I mean, you could cash flow on that, and then, but around 2012, I bought a duplex out there in Del Ridge, out in South Seattle, and that one was a little. I started to get more sophisticated. I started to learn more about the rent to value ratios, and how you don't really buy for cash flow in places like Seattle or California. So I started to look elsewhere, and then start to look at less like investors don't buy luxury places, right? It just doesn't, the numbers don't work. So I started to look elsewhere, and that's where I started to buy turnkey rentals out in Birmingham, Atlanta, and Indianapolis. And that was when I 1031 exchange those properties in Seattle, and then I had 11 properties in 2015. That was kind of my next step.
Wow, that's fantastic. So you went from Seattle to Birmingham, Alabama. That's a huge lift there. So take it that first out of state investment. How did you go about buying it? How'd you find it? And how'd you get boots on the ground to make sure that it wasn't a failure?
Yeah, I mean, all like the framework that I kind of help people do today, I didn't have any of that. I didn't have any other relationships with property managers. I didn't know about the areas. I was just kind of buying blind, just hoping that, yeah, even if I didn't buy it right or buy the best one, at least it cash flowed. So like the first one was about $80,000 all in. First you put like 25 grand down as a 20% non-owner occupied financing. And then the rents were about 850, 900. So it beat the 1% rent to value ratio. And cash flowed. And that for me, that was proof of concept for me to sell my Seattle rentals and then, buy the rest of them out in that market, and then Indianapolis, and then Atlanta after.
Yeah, makes complete sense to me. And you did a 1031. So how many units did you have up here?
I had three.
Three, and you sold them all?
Yeah, and I think I cashed in maybe like $250,000 of equity to buy all the other ones.
Yeah, so you went from three in a very, in my opinion, overvalued market to a probably undervalued market. I don't know much about Alabama, but so what was the, you started with three. What did you get for that in Alabama?
Yeah, so the three, I think the total rents was like 2,200 plus 2,000, so 4,200 a month rents from those three units, and I traded it up for 10 properties times $1,000, so 10,000 a month of income. I mean, I more than 2x my income right there.
Wow.
I mean, there's so many investors that do this wrong, right? They buy something and they say they cash flow, but that's not the complete story. It's return on equity, right?
Mm-hmm.
Sophisticated investors know that they need to kind of keep flexing their equity as the equity goes up, the return on equity goes down. So you got to kind of keep flexing your equity via cash out refinance, HELOC, or just sell the asset, move on.
Yep, absolutely. And you did that with a 1031 exchange, which is the ideal way to do it. So you were just able to roll that into your next investment without having to take any of that tax burden on. So congratulations there. It's great to hear somebody, doing that successfully. From that point, it sounds like you moved on to other asset classes. You've gone into multifamily and mobile home parks. So how did you make that transition?
Yeah, so that's at that point where I started to pay a lot of money to join these mastermind groups, and this is where I learned. I got around other high net worth accredited investors, and it's kind of funny. A lot of these guys are doctors, lawyers, engineers, 20 years older than myself, but they're all saying the same things. In the beginning, you got to do it right when your net worth is under $500,000. You buy a rental property or a duplex or a triplex or whatever. But accredited high net worth investors, they focus on their highest and best use, which might be at their day job, this 6-figure salary or $400,000 salary above, and they invest passively in a myriad of different investments via syndication, private placements, where they're the passive investor. They're putting in maybe 50, 100 grand per deal, and then they're going into several dozen deals and diversifying over in different deals, different asset classes, different partners.
Perfect. And so what was outside of going the single family route, what was the first deal you did after that was in the commercial realm?
Well, the first deal where I tried as a passive investor, I invested with the wrong guy. Actually met him through one of those RIA groups up there in Seattle. And or I got the referral from somebody there, and then turned out the guy was a shyster. But I didn't know any better. And I think more importantly, like I tell a lot of investors, especially accredited investors, your network is your net worth. I didn't have a network to kind of spot check who the heck was this character, right?
Mm-hmm.
Especially today, everybody has a podcast, everybody has a channel, everybody has some PDFs and a website, right? It's really hard to tell without actually building relationships with other passive investors and seeing what they're doing and what success or failures they're having.
Yep, absolutely. And so it sounds like this first one, you kind of got in bed with the wrong person. You didn't know him. You didn't really, you didn't have that relationship rapport built up, and it turned out to be not the right fit. Sounds like he might have not been an upstanding character. So
Yeah,
you
well,
learned from that.
the dude ran off with the money, right? And if people would love to reach out to me, I'd share the name freely. Yeah.
Yeah, that would hurt. If he ran off with the money, that I would. I'd be mad for sure. But you kept going after that, and you're back on the top. That didn't slow you down at all. So let's jump into mobile home parks. This is something I love talking about. We're closing on our first one out in George, Washington, which is just a small, I don't know if you might know it because you're from Washington, but it's just a dot on the map. So what was the first mobile home park that you invested in?
Yeah, so I own majority of my assets are multifamily. That's where I kind of operate and syndicate deals in that space. But talking to a lot of investors, they talk about diversification, right? I'll be the first one to tell you I don't really know how to operate mobile home parks. That's outside of my wheelhouse.
Yeah,
I'm gonna find somebody like yourself who can operate it, right? I'm a accredited investor, more passive investor, so I'm going to use my time and resources to build my network to find folks like yourself who do this as a living, and that is kind of the angle I take it. And it's incredibly different reboot for a lot of people. You're not talking to brokers, you're not trying to find deals, you're trying to find people to find good operators to do your dirty work for you. So I don't know how they work. I just put my money in, right? But it's harder than that, right? It's harder than that, right?
Yeah, absolutely. So you're looking to be a limited partner. That's how you operate in this space. It sounds like you've been an active investor, you've been principal on plenty of deals, but when it comes to commercial multifamily, you're investing in syndications and private memorandums and things like that.
Right. But once I get outside of my lane, which is apartments, into mobile home parks or self-storage, I know, a good thing about a lot of entrepreneurs and business owners and high performers is they're self-aware, right? So I'm very self-aware that I don't know mobile home parks. I don't operate them. It's a different beast. So I stay in my lane. I stay in my little $900 apartments, and I'll let you guys rock out on that.
So fair enough. You'd be surprised.
Right, but that's the thing. So many investors think that they can do it all, right? Especially these guys who think they can. They're from Seattle or California. They think they can buy an apartment in Texas or whatever. Not gonna happen, right? Dude, I wouldn't invest with you. You got to be boots in the ground.
Yep. Yeah, and that is the hard thing. Out of state investing it's a very prominent topic these days, especially if you live in a place like Seattle where you just can't get the cash flow. So you need to build the boots on the ground, and it is hard to do that unless you're actually living in the area. So, I applaud you for knowing your strengths and sticking with those, and not trying to branch out into something that you'd most likely have a steep learning curve on.
Right. And that's why I stopped doing the single family homes, right? Because you start to learn as a remote investor that everybody thinks of you as some lazy rich guy out in Hawaii or Seattle, and you're just going to get abused, right? It's like trying to fight with one arm behind your back. Everybody's just going to gouge you on all these plumbing repairs. I remember one time I got this $900 plumbing repair, and I was like, well, what was wrong, right? What'd you guys do? Send over two guys at $100 billable rate for 4 hours? What they do? Play video games and take a nap and what happened, right? This toilet exploded in a gazillion pieces, and they had to clean it all up. What happened? That's just what happens, right? With remote investors, and that's why I don't know why people do the BRRRR stuff. Maybe you have to take a chance because your net worth is lower than $250,000, but for accredited investors, just man, just find somebody like yourself or somebody who it's their job, right, to do it.
Yep. And that is the exact reason I got started in flips and wholesales. And that's the exact reason why I left flips, because I did 2 of them and I realized damn, this is a job. You need to be an expert at flips in order to make it make real money in it and make it, a valid source of income. I was looking more for investing. Obviously, repositioning any commercial asset is active, but it's not like flips, and more power to those guys. But it is, stay in your lane, master whatever it is you do, and then network with people who aren't in your lane in order to take advantage of their asset classes as well.
Yeah, I'm in another mastermind called the Collected Genius, and then the guys there, they're wholesalers or flippers. They do like well over 100, 200 a year projects.
Oh,
And
wow.
I look at, sometimes I watch their presentations, and I'm just like, geez, like the level of sophistication is just mind blowing. The
Yeah.
flow charts and the instruction manuals they have for their myriads of staff. I mean, like, and they joke, right, all the time, like, oh, the local RIA guy, the mom and pop investor who goes to the weekend seminar, like, they're just gonna get their shorts eaten. Like, there's no way that somebody can compete with those people.
Yep. Yeah, the volume that some of the flippers do. There's some guys up in Seattle, and it's just like, God damn, you guys are pros. You know what you're doing like 15 a month. I'm like, what? Come on. I could barely do one at a time for over the period of 4 months. How are you doing 15 a month? Shoot, I forgot where I was going. I had a track there. Anyways.
But maybe that's like the reason why I do apartments and probably why you do your stuff is like it's less competitive, right?
Mm-hmm. Yeah, single families is definitely competitive. The advantage is there's a lot more of them out there, so there's more opportunity. But you're right, it is more competitive, and it's just nice to be in something that not a lot of people are interested in. At least that's why I like mobile home parks, because not really many people want to actually go out there and get a mobile home park. So that's it's to our advantage there. Moving on, let's see. We already talked about your multifamily. Actually, go in. So do you still own multifamily today, or are you 100% passive, limited partner in all your deals?
I'm general partner in all my deals. I'm kind of taking a more active approach. Had some fallout with some folks, and I realized that on behalf of my passive investors, I need to, take a more active role in my fiduciary responsibility and kind of be in the driver's seat as much as I can. So, yeah, I mean, through COVID, collections are just pretty much right where we were, right? Maybe 97% is where we normally hover. You're always going to have a few deadbeats, but April, I think it went down to like a few percent points. And then I think at the lowest levels on average, it was like low 90s%. But on our deals, we're making money as long as we can stay above 50, 60%. So I think that shows the robustness of workforce housing. And, I mean, our business plan is not to work on development type of, heavy value add. We're mainly going into stabilized assets where 90% are occupied or more.
Oh, okay. So you are not looking to reposition. You're looking to just buy an asset that's already stabilized and then, rise it with the appreciation and benefit off the cash flow.
Yeah, do a little bit of value add, so like maybe $4,000 to $6,000 per unit. Put in new flooring, new appliances, but not really get into the big stuff like countertops or cabinets. Buying something with a little bit of management inefficiency, so you can bump the rents up $50, $100 on average. Gotcha. But yeah, mainly we want to walk into a deal with day one cash flow on a project level, and then get that Fannie Mae, Freddie Mac non-recourse debt. The main thing.
Makes sense. So go quickly. You've mentioned Mastermind a few times. I've been in Masterminds, and I know that the benefit of them is being able to take advantage of people who are beyond where you are right now, and who've kind of surpassed your level, and benefit from their expertise. So go into your experience with Masterminds and how that's kind of helped your career so far.
Yeah, I mean, it's always good to get around people that are the next step beyond you. I would say that's half of it. The other half is just getting around people that are just as motivated, moving on the same path as you. Like most of my clients are high pay professionals. They're not really looking to do their own deal. They're mainly looking to network with other people so they can see what they're doing in terms of asset protection, like taxes, infinite banking, and what deals they're going into, what sponsor they're investing with. But for me as a more active investor, it was pretty critical to get around the movers and shakers and kind of it's just nice to see your peers, right? To, who are
Yeah.
kind of doing the same thing. Because I'm sure, you've got friends from college or before that, they just don't do that stuff. I mean, it's just not in their nature. So peer group, you're the 5 people you hang out with most, right?
Yep. Yeah, and especially like in my experience, investing can if you're doing it alone, it can get pretty isolating. And so being able to be in a mastermind and get, as you said, around like-minded individuals who are doing the same thing can really, I don't know, for me it really motivates. So I love that. And I've been noticing your background. If anybody watching on YouTube, the join the tribe, go into your podcast and everything you're doing there.
Yeah, so I started my podcast back in 2016 when I was still doing single family homes. And then, a lot of my buddies, like I was just saying, like a lot of my buddies asked me, well, how am I doing this? What do you mean you don't visit the properties you buy? Like, how do I do it? And, and waste my time talking to them about it, right?
It's like,
So
God damn it, I'm just going to make a podcast.
I'm just going to like record this damn podcast and you go listen to it. And most of them don't listen to it, right? But a lot of people did, crazy enough. So I kind of built up this big following that kind of just wanted to follow me into what I was investing in. And I've been, there's so many gurus out there that teach this stuff. And like, I'm just not into that. I'm just looking for people who want to buy into a group of high quality, high paid professionals looking to network with other passive investors. That's my brand, right? We're not here to teach it how do you find your own deal, right? That kind of stuff. No, like we're essentially here to help you create your family office, right? What deals are you going into? What are you doing for asset protection, liability, infinite banking? All the secrets of the wealthy, right? That I kind of discovered myself. But and then kind of create the friendships, because the relationships are the currency of the rich at the end of the day.
Awesome. I love it. And everybody that's watching can see the URL to get involved there. But now that I'm talking, the Zoom camera's on me, so I can't read it. So read off, if somebody did want to get, learn more about that, where should they go?
Yeah, they can check out my podcast. It's Simple Passive Cash Flow, iTunes, Google Play. And then of course the URL is simplepassivecashflow.com. And then if anybody wants to kind of get a hold of me, check out the podcast first, and then feel free to shoot me an email at lane@simplepassivecashflow.com. But
Cool.
I think whenever you listen to podcasts, don't be that asshole who just shoots people up and says, "Yeah, I just saw your email. I emailed you, man." Yeah.
Do your homework first.
Yeah, do your homework first, bro.
Podcast.
Right? I mean, yeah.
Awesome.
Yeah.
I love it. Hey, we are at the end of the podcast, so we're going to go into the quick question round. It's where I ask quick questions. You give quick answers. Starts with the books. I'm a big bookie, so I like to ask people book recommendations, your book recommendation for real estate, and then for general life wisdom.
Millionaire Real Estate Investor by Gary Keller. I think once you read that book, you should stop reading books. I mean, go analyze deals, go talk to people. The 70-20 or 10 rule is 10% of this stuff is books and podcasts, 20% is talking to people, but 70% is doing it. And the other book, I'm sure you hear this all the time, 4-Hour Work Week is pretty cool, but yeah, stop reading books, guys. Like, don't fill up your, what they call the shelf help.
I like that. And the Millionaire Real Estate Investor is a really good one, especially if you in fact, it's, I think on my website I say it's if you only read one book, read that one for real estate.
Yeah, I agree. Totally agree. A lot of fundamentals, and like, if you don't get it from there, you'll never get it.
Yep. Everything you need is in that one. Next question. Habits are the foundation of our life. So if you could point at one habit that you feel has contributed the most to your success today, what would that be?
I'd say just executing, just doing things. So many people make lists and plan and never get anywhere. Just a lot of things in real estate are relationship based, and nothing happens unless you pick up the phone and call somebody.
Truer words have never been said. Next question is advice for your younger self. So if you could go back to Lane, who was just getting into his first deal up here in Seattle, sit him down, give him one piece of advice, what would you say?
Yeah, so obviously, now as a credit investor, I do mostly private placements and syndications. I still have a couple of rental properties, I'm trying to move away from them. And people ask me all the time, well, shouldn't you have gone to syndications earlier? And as much as I say the rental properties are a pain, I mean, for me, it was critical. I didn't have net worth of anything when I got started. If I would have played my cards right, I would have gotten up to like a $500,000 net worth and then gone to bigger deals at that point. But when I was starting out, what I did was probably the best thing I could. I mean, you leverage my day job. My first 10 years investing, my engineering job was my highest and best use, where I got paid salary for trading my time. So
perfect. Awesome. And you've actually, the last question you've already answered, which is if somebody wanted to reach out to you, what would be the best way to do that?
Yeah, simplepassivecashflow.com. Check it out.
Easy as that, simplepassivecashflow.com. I will also put that URL in the show notes below. So if you want to reach out to Lane, get involved with what he's doing, go ahead and click through there. Again, Lane, thanks for hopping on. Had a great time talking to you. For everybody who's with us today, thank you guys for showing up. You're the reason that we do this. So thank you for being here. Again, the best way to support the show is just to subscribe, like, and share this episode with your friends and family. Other than that, hope you guys have a good week, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.